Sure. That's not Zoom though.
Oh, that's not Zoom.
Our layers. Then just go to Zoom 41. I think it's Zoom 41. Make sure it's the right one. Yeah. Like how so?
Good afternoon and welcome to Chicago, Future of Finance. I'm Oliver Renick. Stocks are looking pretty good right now. Even though equities as a whole are up just 0.5%, it's a pretty important 0.5%. Volatility as measured by the VIX also below 16. First we had Alphabet making highs when the market was under pressure. Then we had stocks generally holding on with help from the likes of Apple in the last week, also making highs. And crypto was crashing and equities skated right past it. To me, this is kind of looking like a market that looks like it wants to get to new highs. Eager to make moves led by big tech, including Microchip and ON Semi. It's something that Brent Kochuba, SpotGamma, has been talking to us about, not to fret some of the systematic weakness that showed up in the market, some of the put buying, and things that looked generally just like a bit of a breather from the overall momentum. And sure enough, the momentum seems to be extending here. That is why I've kept my risk radar yellow for stocks despite the red on Bitcoin. Don't really have a lot of information on bonds and the dollar, but that might be starting to clear up a little bit as well, considering that it does look like the Fed is going to cut. The dollar today is getting whacked. That's a pretty good sign that the market is taking those odds of a Fed cut seriously. That's something that we looked at in some significance yesterday. The fact that you had odds on Kalshi for a Fed cut going up to 93%. That was looking to me like a market taking the Fed very seriously, perhaps also explained to some extent why the crypto markets decided to firm up. Here's the Fed decision for December, now sitting at 93%. That's a pretty clear sign that we're ready to go and get a little extra juice into an economy that looks like it's already holding on decently. I want to pull up a few stats from this morning. ISM services at 52.6. That's not a bad figure there. Okay, better than expected. Services still in expansion territory. That's good. Some of the other numbers weren't exactly perfect. Industrial production, though, came in line. Not a lot of big expectations from that category of the economy after we saw manufacturing still below 50 in that ISM report. We did see a little bit of lift in some of the import and export prices, but clearly the market is not thinking inflation is a force that's going to prevent the Fed from cutting right now. And then finally, also from earlier this morning, the ADP employment report did come in negative, but considering that we had a long, 40-day plus period of no government data, so far the numbers haven't been awful that have arrived. I think maybe there was some thought that it could be a shocker once the market got its numbers back and the economic data rolling back in. I think there were some thoughts maybe that we were going to get a litany of bad numbers, but so far it really doesn't look like that. Let's talk about the flows that have been driving the market and more with Brent Kochuba joining me from SpotGamma. Brent, this market looks pretty firm to me. Tell me what stands out to you, stock-wise or just generally here.
We started today with the 0DT straddle priced at about 40 bips, which for the S&P 40 bip straddle for 0DT, again, is very, very low, even though there was ISM services, and I understand that's not the most important economic indicator. It just highlighted to me the fact that the market's pricing in 90+% rates of an odd cut, as you just mentioned. Odds of a rate cut. So yeah. This is a very low volatility environment at the moment that is favorable supporting stocks. Now, we did have a little spill this morning when Microsoft said that some of their AI sales may not be coming in line. Market dropped very sharply, as you can see right there. We went from that green to red. Interestingly, that move was exactly the same as the straddle, is about 40 basis points. Then the market bounced. Microsoft also walked that back a little bit. And then we just sort of had this risk on drift higher. And so the key element to this, again, is in the short term, volatility is very low and is kind of priced for perfection. We're really waiting on this data for Friday, which is PCE. And then obviously we have FOMC next week. So until then, it's sort of like if you're in the 0DTE or short dated option space, it's kind of like party on, to quote the Wayne's World there from back in our day.
Party on.
Yeah, party on, Wayne.
That little red dip didn't last too long today. And, to see dip buying, really nice, because there's been a few spots where bears have tried to take little bites, but they just can't really get a hold of anything.
Yeah, they can't get any traction. They can't get any momentum. I think what was interesting is that Microsoft headline did knock the market lower pretty quickly. And I think a lot of people go, well, look how fragile this thing is. But when you have implied volatility so low, you have this jump risk, right? In the short term, at least, where a headline comes across and then everyone who's been pricing in just a, 35, 40 bit move in the market suddenly has to readjust to that jump in the market. So that was the note of the spasm this morning. As that odds of a rate cut next week gets pulled forward, as the economic data just seems more or less supporting of that rate cut, I think we're kind of pulling forward some of the post-FOMC momentum that we could see. And ultimately, you continue to just watch that 7,000 level. You're seeing that 711, that's the ES futures equivalent SPX call wall at 7,000 there. So that's the big level to watch for sure. I know the market is rallying today, and honestly, the AI chip names aren't all participating in that rally. You do have Microsoft down about 2%. NVIDIA is pretty flat on the day. So this is actually something of a broad-based market move higher here. Not huge, again, in the 30 to 40 bip range. But for bulls, this is great. This is kind of what you want. You want this consolidation so that when we finally get the clearing of the events coming up, the macro data, FOMC, et cetera, then you could really see that Santa Claus rally bringing a final move up to 7,000.
Gotta say, at this point, I think I would be shocked if we don't get to all-time highs. It's just the momentum, the chart held, and the fact that you had Apple cruising for weeks on its own to highs. Before that, it was Alphabet. As you mentioned, there are a few key players missing today from tech, so it's not the leading performer, but we've got some help from banks. We've got some help from energy stocks. We're going to talk a little bit about that as well later on in the show. Apache's really cruising. We're going to hit that with Jon Najarian. But I mean, overall, this looks like a pretty good situation. I'm pulling up the chart right now, and I mean, look at the KRE here, regional banks up 2%. You know, some of the parts of the market that get stuck or give us concerns, they're even pushing up to local highs on the one-year chart. And then on today, massive move. Microchip, we're going to talk about those later on with Charles.
Don't forget Marvel.
Marvel, bingo. You know, it's 8%. These are not small moves, and these are not the types of trades that usually, or these are not the types of trades that disappoint, really. These are kind of like the undercurrent of a wave that then seems like it's building again for big tech.
That's exactly right. And we talked yesterday, Apple at all-time highs is not the kind of negative stuff that you see right before we crash. And so the pieces are sort of in place, again, to finish that rally off. If AI can get a little bit more traction here, obviously that's the big breadth or big component of the market. But today feels fairly broad-based. Again, with those short-dated implied balls so low, that's actually kind of a bullish sign for the market in the short term. So, you know, it's just, if you're a bear right now, you don't have anything to grab onto, and I think that's a critical thing. Like, all else equal, the market drifts higher, and that's really what this is about.
Yeah. Okay, let's go into SpotGamma in some more detail. Let's look at some of the flows. Thinking about what you guys really specialize in, I do think this has been very telling. Again, I think that the flows that you've been watching and the supportive nature of both the stock specifics and the overall market. Let's go back to some of these levels again, because maybe, you know, even though it looks like a lot of the stuff looks good for trend, for bulls higher, it does seem like, based on what you were telling me before, that, you know, we might get a little chop the closer we get to 7,000 or so.
Yeah, right now on that map, what you see is there's a big bright blue band above, kind of in the 69.25 area. And what that tells us is that we should sort of grind up into that level. That's the overhead resistance level for today. And then to the downside, which is interesting, is there is a little bit of a soft underbelly to this market. I would say if you break 6,800, then you got to start thinking about a test of 6,700. But obviously, it's been not that easy to break that 6,800 level. So for now, we continue to say, while the S&P is above 6,800, options flows are going to be supportive of the market. It's under that 6,800 level where you may see a relative pop and vol, and then we could sort of jump down to that 6,700 level. But at 6,700, there's more purple on that chart, right? That purple is positive gamma. That's support. That's where flows should sort of bring mean reversion to the market. So there's a very clear set of levels here, just basically just above 6,900, which is the short-term resistance, and then 6,700 is that big support line. So, you know, at the moment, we're really under the control of zero DTE. That vol is coming in. Once you get the final clearing of, you know, of FOMC, and FOMC is not so much about what's going to happen. We consider the rate cut, you know, baked in at this point. What is that forward guidance going to be? You know, that's pretty critical, and it's a moving signal a bit, because we all know we're going to get a new Fed chairman, and there's sort of the interview sessions going on for that, and that's another little dynamic here in the market. But the market overall seems to be getting very comfortable with at least what's happening in the short term, and I say that because vols continue to trend lower.
Okay. Brent, the stock specifics, looking at maybe some of the companies that have been highlights for us. I'm pulling up the tape right now.
Yep.
Tesla, by the way, looks pretty good again. I like to see Tesla up there with big options volume.
Really big.
Gamma pulled too. I think this still remains a really important stock, especially as Elon kind of becomes, and Tesla becomes more of the Tesla story again, less the political story. I know he's still out there a lot, but it helps, I think, clarify the narrative a little bit. And if Tesla can move through 445, if I just show the chart real quick before we come back to your data, I mean, it looks like you get through 450 or so, Tesla could be free to roam again back towards 5, and holy smokes, that's never a market that's not ripping if Tesla's your leader. That means growth, and speculation reigns supreme in my mind.
Yeah, I agree with you on the Tesla story. Over 440, our data was showing that you would see a pretty quick move to 500, because there's a lot of negative gamma between 440 and 500. So that infers that traders are short, traders are long calls, dealers are short those calls, and that could create a little bit of a chase. That's also very big relative volume for Tesla. 2.4 is quite a bit, especially relative to NVIDIA. Also note IWM on there at 1.6 million. That's a lot of options being traded in that small cap sector, and if that's moving,
there are two things about Chicago
good as well.
Yeah. All right. So thinking about the leadership again, really good to see the Tesla style of leadership, Apple in there as well, Nvidia too. By the way, gold is still not being left behind. Something kind of worth thinking about as well. That in all of this, gold has basically done what I think a lot of people wanted it to do, which was stay steady and hold on to the massive gains that it's already put in on the past year. The fact that it's up there among the options traders with some of the juicier growth stuff, to me, is pretty encouraging. It just gives you another asset class you can kind of hang your hat on a little bit.
It was overbought, absolutely, in the end of October period. We saw that in the implied vols where IV rank was at 100. Silver is doing that sort of IV rank at just very overbought levels too. We were flagging that a little bit on Monday and Tuesday. So, you would expect some consolidation after you get those overbought readings, right? And I think that's what we're seeing. And if you're a bull, quite frankly, you want that consolidation, right? You want that resting, burn off some of that overbought condition, and then we can kind of move higher. It's sort of what the S&P is doing a little bit, right? We had a 5% gain into Black Friday. Now we're consolidating a little bit and getting ready for what looks like a second move higher. And gold really looks like that. I think silver needs that break here as well, just to rest, right? And you get these situations where calls are very expensive, implied vol is very high, and it's very hard, I think, for stocks and commodities to rally when those are the conditions in these names that have very rich and high volume options positions.
Yeah, high volume options. I mentioned microchip. That's one of your top daily movers as well, next to On Semi. We're going to talk a little bit about Netflix versus Skydance and Paramount in a little bit here. I know John's watching that. That's in the mix too. SLV, by the way, insane move in the last couple sessions. Today it's holding on, a little changed. That one was an absolute screamer. Oh, and also look at HYG in here. I think that anybody who likes kind of the fundamental credit picture has got to love to see HYG heavy options flow on a day where it's also firmed up.
Yeah, you get a lot of rolling in these names, like a TLT or an HYG. They are very big options ETFs. And so as these sort of rate pictures change and I think sort of cauterize around the 90% rates of a chance of an odd cut, and then also who's going to be the next Fed governor, I think traders are starting to pull forward a little bit some expectations around that. And so you're starting to see volume pick up in some of these ETFs, rate-related ETFs. And obviously, as I mentioned before, a lot of these ETFs will have some rolling and different technical sort of shifts as well. So, but to your point, big volume there, and that suggests that a lot of flows are taking place due to macro currents that are changing.
Okay. Brent, finally, the macro currents. I mean, it looks, when we said, it's basically, a lock essentially for the Fed next week. How much of that do you think needs to come to fruition? Any risk there if any of the data the next 48 hours? I mean, I don't think so, right? Like what data could possibly show up after we got a weak ADP that could cause the Fed to not cut? And it seems like that's kind of out of the ballpark.
Yeah, the only thing showing a little bit of event fall at this point is Friday's data. The inflation data, the CPI got punted back. NFP's gotten punted back kind of post-Fed. So, those things are going to be happening right around Christmas. And, quite frankly, you're going to be sitting there opening your presents and not thinking much about CPI, I don't think, at this point, particularly with the government shutdown and just how all that data is out of line and out of whack. And it's just hard to sort of, I think, count on that or factor that in as clean data in some points. And so, ultimately, it's going to be up to the FOMC to leave a little bit of forward guidance. So there is a little bit of event vol for Friday, assuming Friday's PCE just comes off without issue. Then there's a little more vol contraction into the weekend. And then again, I still think there's just going to be a final year-end vol drop after FOMC that finishes up for the final move into like the 7,000 level. You have the Christmas holiday, the shortened trading period around all that. So again, this is all lined up for a nice year-end move.
Those are all generally bullish things, right? Lower
they're
volume,
all bullish things.
You get momentum, so you squeeze a little bit. Everybody loves the holidays.
Nobody wants to own puts over a holiday. It's an expensive thing to do.
Nobody wants to own puts on a holiday when you got microchip and others going ballistic. Thanks, Brent. Always great and good, really good analysis of the flows the last couple of weeks. I think anybody who was watching this had a pretty good mind that we were going to firm up and hold where we were. So to me, it looks like next battle's at 7,000, which would be at all-time highs. That's a fun battle to have.
Yes, sir. Thanks so much, Oliver.
All right, you got it. Thanks, Brent. Appreciate that very much. Mr. Kochuba, SpotGamma, Innovator Buffer break, 2 minutes, and then we'll be back with Mr. Jon Najarian waiting.
Hear you loud and clear. Am I coming through okay, or do I need to switch the mic?
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
Welcome back to Chicago Future of Finance. I'm Oliver Renick. It's time for the gamble. Mr. Jon Najarian, how you doing, sir?
I'm doing great, Oliver. Great to be with you as well.
Likewise, your brother and I talked about the Bears looking pretty good, but under 5% for the Super Bowl yesterday. What do you think about that? Fair, or should we be getting a little bit more love here in Chicago?
Well, somebody got 30-1 odds early before the season kicked off, when we were a much smaller chance of getting to the big dance. And since, by the way, they put 50 grand on that one, Oliver, it would pay 3.3 million if they are correct. Now, I imagine they could already trade out of some of that right now, because as you've said, it's certainly gone in the Bears' way. But big game on Saturday, and they moved it to nighttime. It's going to be at 7:20 on Saturday, Bears-Packers.
Okay, well, I was going to ask where it's played. That way, if it were extra cold, Bears might have an advantage. But I guess if it's against the Pack, it don't really matter where they're playing.
Oh, yeah. It will be, I tell you what, it's going to be one of the most important games. I mean, tomorrow night's game with the Cowboys and Lions is likewise going to be pretty interesting. But I think the Bears game is one everybody's watching, because if they can win this one, they basically take the division and set themselves up nicely, perhaps, for a bye in the playoffs.
Chicago's at 4% right now for the Super Bowl, but to your point on the game coming up, Chicago at Green Bay. Right now, I guess Kalshi's given a pretty big advantage to the home team here. Green Bay at 72%. I mean, 28, I guess, I don't know, not the worst. We're still in the mix.
Oh, yeah. And, you know, the Bears, with the running attack they showed us this past, you know, for Thanksgiving, I think they are really in a good position to do some damage up in Green Bay. I'm looking forward to it. I've got a lot of Wisconsin friends that are betting me. I should probably lay some of that off on Kalshi.
Like that. There you go. Yeah, hedge it out. Jon, okay, let's. I'm going to start pulling up some of the macro stuff here. Obviously, the market likes the odds of rate cuts going up. Market also likes, it seems like, some of the chip maker stuff happening from Microchip and On. What do you see as being largely the driving force right now for this equity market resilience that we're seeing?
Well, again, whenever you see so much fear, like going into expiration Friday, the 21st, we peaked at about 27 on the VIX. Today, right now, as you and I are speaking, we're at 16. That's a 40% drop. That's a serious move out of the VIX. And so
It's like all our concerns dissipated, whatever they were.
Yeah, and I think people, we always say stocks take the stairs up and the elevator down. So when we were going down and people were seeing, oh my gosh, Bitcoin's breaking all the way down to 80,000. And a lot of these stocks, oh, what if Michael Burry is right and these stocks continue to move to the downside? Well, so far, the last few sessions, it doesn't look like Michael Burry's going to get anything but buried, and probably why
Nice.
he has
You got there
rolled
faster
out
than I
of
would.
rolled out of his hedge fund. So it's never fun when somebody's losing money, and he was just early. Obviously, Warren Buffett putting a big bet down on Google has worked against anybody who really says, oh, AI is overrated. You're not going to see any return on your investments for decades. That's bullcrap. They're going to see returns. It's not going to be as fast as some of the stocks have risen. That much is true. And stocks consistently get ahead of themselves. I mean, when RCA was the biggest stock in the world, when television came out, where's RCA now? You know, people basically get all pumped up about some of these technologies when they come out, and then they pull back pretty seriously. In this case, I think it's something we're going to be using for quite a while, but there will be winners and losers. There always are.
Yeah, it seems like the market's finding a little bit of faith in Bitcoin, just kind of tourniqueting some of the bleeding here is the best way I think to describe it. The odds that it gets below 20,000 this year in Kalshi have dropped down to below a third. We're at 27% right now. So that I think also is a little bit of encouragement for that crowd where it has been a rough couple of months. But I know you've also got some stocks that you're watching. I think that's the highlight for today, Jon, is the stock specific, the equity market stuff that's happening. I know that you were looking at Netflix and maybe a little bit of a streaming kind of content battle where P-Sky is also getting hit. Both these companies getting hit today. What do you think that tells us? Maybe a little bit too little of content to go around, or what's going on?
They're paying too much is what it's telling me.
Paying too much.
You know, if indeed they're valuing Warner Brothers Discovery, WBD, at 60, 70 billion dollars, when they're not making the kind of money that would justify that, that's based on the catalog, obviously. HBO and the other things in their catalog. That seems rich to me. And I'm not the guy. I'm not at Comcast. I'm not Mr. Roberts. I'm not Mr. Ellison over at Paramount Skydance. And I'm not Reed Hastings over at Netflix. But Netflix was taking it on the chin, and they have moved down pretty severely since their recent high.
Yeah.
It's not all just for this bid. It's how, if indeed people decide that, hey, you don't have a hot show right now, so I'm going to migrate to another platform. I think a lot of that does happen, and probably a lot more of it will happen unless they're able to get the sort of content people really want. And my question is, Oliver, do they want that old content from HBO? Do they want the old Sopranos episodes and all that kind of stuff? Curb Your Enthusiasm. Is that what drives this kind of valuation? Because to me, that's just driven it too far, too fast.
Yeah. I do think there is something to be said there. There's just so much content, and what to pay for it versus how successful, and the fact that people can kind of bounce in between what they like the most. I definitely have been. I don't really, Netflix, I guess last thing I watched was like some of the Viking stuff that they bought. But this is where Kalshi gets really fun, and where the segment gets really fun, is we can go and we can see where some of the indications are on the market for this. So I'm going to pull up the culture page on Kalshi real quick, which gets really interesting, because then you can see kind of where the most popular shows are being ranked right now. Everybody's crazy about Survivor, Amazing Race. Last of Us is the first show that shows up on a popular betting on a popular bet, which is when the next season will be released. Of course, that's HBO. By the way, I was about to say I've been watching a lot more Apple TV. Finally decided to check out what they got, and boy, they've got some really good stuff. Severance is on here, so there's just I don't see a lot of Netflix heavy stuff on here. Maybe I'm missing something. I guess maybe you can watch some of these on Netflix, maybe Love Island or Outer Banks. I don't really know. But in terms of flagship shows, it doesn't really seem like they got one right now that's driving people in.
Right, and that's one of the big worries. I mean, Amazon Prime is somewhat diversified by the sports offerings. I mean, like, for instance,
Big
tomorrow
time.
night, that's going to be an Amazon game. Netflix doesn't have that big standout right now. And by the way, Pete and I were talking about it on the show today. We think that something like what's going on with so much parity in the league is great for ratings. And it's one of the reasons that, somebody like, again, Amazon could be winning in this game because they were early to the battle for sports content, live sports. And, they're going head to head against the networks and maybe even outdoing them.
Yeah, no, I agree. That's a really good point, that if sports are as tight as they are for big popular games, and people now obviously betting a ton, so it draws eyeballs away. It's all just eyeball battle, right? When the games are good, sports are going to dominate, which is why everybody kind of wants a piece of that. A few other trades and stocks that you're looking at, John. I wanted to pull up some of the tech stuff today. We mentioned maybe some improvement in crypto sentiment. I know you were looking at some trades in Coinbase. Tell me what stands out to you, because the chart doesn't look great, but it still, I think, looks marginally better than maybe the coins themselves.
Yeah, Coinbase, obviously, US-based diversified platform. It's not just a Bitcoin bet. They do a lot in the US. Kraken does a nice job. Gemini and Galaxy do nice jobs, but nobody's in the US as big as Coinbase is. Somebody puts down a 17,000 option bet on the January 280 calls. And that was when the stock was trading 273. I'd rather buy the 275s than chase it up to the 280s. But I would like to be in a position, Oliver, to start selling higher strikes against the calls that I buy at the 275 strike. And 17,000, that's 1.7 million share equivalent. 1.7 million times a $270 stock. I mean, that's a lot of money somebody's controlling in here. If indeed we stabilize, we're at 92,000 now for Bitcoin US dollar. If we can keep pushing back towards 95, or at least hold 92 or 90 for a while, I think you'll see Coinbase and a number of the others turn around and start moving to the upside faster.
276, where we're at right now. To your point, it seems like a good bit of trading back and forth right around this area. It also just seems like this group got just, slaughtered really, really hard. Obviously, the chart for the coins is really rough. The chart for Master is really rough. But I've had the view that Bitcoin is going to give a stronger battle at 100K. So that to me kind of seems like a natural place to revisit. For BTC would be 100, and for Coinbase, maybe that is upwards of what, maybe like 300, 320 or something like that, if you kind of go the equivalent on that chart.
Yeah, I mean, I'm seeing a lot of congestion right around that 316 to 318 level. That'd make whoever bought all those calls today a very happy camper, I'm sure. But seeing a 5% rally out of Coinbase against, not as much going on in the cryptos, even though they're rallying, tells me that it might have been a little oversold.
Yeah, I think that's very fair. As I've said before, I have a view on what Master is doing and the risks that poses to crypto. But if you just forget even all the fundamental stuff or how you feel about crypto and all that, the technicals to me look like BTC needs to fight a little harder. at 100. I don't think that it's going to stay down there very easily. I think if you've got the stock market breaking out and you've got the Fed cutting, at minimum, Bitcoin should be fighting for 100K. That's kind of where my thought is on that. I do, John, know that you're looking at one more today, which I think is worthwhile, which is Apache, because it's actually not even a tech leadership day. It's actually an energy leadership day. It's a bank day, and APA is ripping. What do you got for me?
Well, this is another one with a lot of upside calls being bought today. They're buying January, same as what was being bought in Coinbase. But I like it. It's a $26 stock when they started buying them today. They were buying the 27 and a half. So that was just $1 above the market. And paying just $1 for those calls. So they certainly get a lot of leverage. You know, that's what they're paying 4% of what they'd pay to buy the stock when they're paying $1 for those calls versus 26 for the stock. So I like that. I think this is one that could move pretty fast. I mean, we've seen basically pressure put on crude oil and holding it beneath 60. Any lift at all, and I think those energy names move pretty fast. And this is oil and gas. It's not just gas. It's not just oil. It's both.
Yeah. The chart too, I mean, it seems like, pulled back for a while, and the kind of steady decline of that now looks like kind of a steady turnaround. The big sell-off we had in the spring had this massive engulfing candle that the chart had to work really hard to get past this summer. So it seems like kind of cleared through some of the technical resistance. I'll be honest, I've lost a little bit of the crude story somewhat, John, but it also just I kind of lost interest in the crude story marginally, just because there's always so much discussion about what the geopolitics or this person or this country doing this and that, but ultimately crude has not been able to hold a bid. So to me, it's kind of like just a weak chart until proven otherwise. But that doesn't necessarily mean a company like Apache and the call buyers there are going to get dragged down by the same forces.
Right. And there's probably a little gamesmanship going on with Putin and Trump and Zelensky, because obviously Putin's oil, he can only sell it to a couple places on the planet right now. And if there were a peace accord were to be struck, obviously that's a pressure, a downward pressure, not a positive pressure, not a lift for crude oil. So perhaps that's one of the reasons people have been leaning on crude here beyond Saudi and beyond our fracking success in America, is as we get closer to, hopefully, fingers crossed, some sort of a peace accord between Zelensky and Putin. I think that puts pressure on crude because he'd have many more places to sell it.
Yeah, facts. Very true. That is something to watch, where maybe there could be some volatility around some kind of peace accord between Ukraine and Russia. Hopefully the case. Fun one, John. Nice. Good stuff. From football to geopolitics and wartime commodity trading. Nice variety there. Good to see you.
There you go. Thank you, Oliver.
Thanks, John. Have a good one. Jon Najarian, co-founder at Market Rebellion. All right, 2-minute break, the buffer break from Innovator. Then Charles Moon's going to join me here on set as we take it into the bell with 20 minutes left. We'll see if stocks can extend strength on the session. 0.5% now faded a little bit, but we're still in the high 68s. Market looking pretty good. We'll be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction. With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovators' floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
There we go. Okay, we're back. We got 18 minutes into the bell. Stocks are looking pretty good. Equities have been holding in throughout the day. We pulled back just a tiny little bit. I'm here with Mr. Charles Moon, joining me from Prosper Trading Academy. As Charlie, we've got a pretty decent little session going on. We've been talking about some of the big growth stocks, tech companies that are coming back. But one of the names that stands out to me that I know you've been watching, I called it the stock of the year, is Robinhood. Yep. Hood, baby, and it's jamming.
It sure is, you know, and it's been It's been pretty weak, as the growth stocks kind of unravel. But now that we're starting to put more risk on, making a really good move. Having Bitcoin rallying and crypto rallying, that's only going to boost it up a little bit more as well. But, even in the near term, I still believe it's undervalued. This is one of the fastest growing brokerages out there, one of the most popular names as well. People kind of want to symbolize it and talk about it as a meme play, but quite honestly, this is one of the stalwarts in terms of performers this year. So I'm a big fan. We just crossed above the 50 SMA today, so if we could close above this level, there's a lot of upside for the stock to play catch up to in the near term.
I'm going to pull up the chart here for Hood. I mean, what's not to like, basically? We did have a pullback for a moment there, but not long. It's got one of these charts that made lower highs and lower lows. So it kind of, arguably since September, you could say it's in a downtrend.
100%.
But so many of the companies that look like that already came back,
Right.
The S&P obviously being pretty close to highs. We got highs in Apple and others, so why wouldn't some of the favorites come back, especially if the Fed's cutting? That's kind of my take on it.
100%. And again, when we talk about retail darlings, there's a lot of people that made a lot of money on this name. And when they start seeing strength again, that's when you see that money piling in from the, the smaller player side. Again, it's a great momentum stock, great propellant. This is one that you want to keep an eye on here going into the Fed meeting next week.
Okay. If Hood does make the highs, do we generally expect kind of all the frothy stuff to kind of start to drift back into the market as winners, whether that's quantum? By the way, the quantum chart is kind of another one. If you look at one of the ETFs, it does kind of look like that, where it was making the lower highs, lower lows, and then came right back, using QTUM as an example here. I mean, another one that's got some strength again.
Yeah, and again, these are, for me, it's more of a momentum-based play. If I was going to look at anything in the AI sector, that would be, I would say, a bubble that you have to be really, really cautious of. It is the quantum sector. I'm a much more bigger fan of the energy play, the nuclear names, as a long, sustainable trade. But again, if we're looking at things short term, we're looking at points of recovery. And for me, again, putting risk on, it's not going to be looking at the Mag 7 names going up. It's going to be everything else that's been working lower and trying to come back. So that leads to names like, crypto plays, for example, stocks like BLSH, IREN, HUT, they're all starting to make a bit of a move. Even MSTR, which was, talked about as being squeezed to death and back to a single-digit stock, is now really coming back to life here, and we're seeing the comeback in the last few days in names like Coinbase. So, like I said, these are, for me, attributed to obviously the crypto market, but more so that retail is starting to feel more comfortable putting risk on. And if the institutions plus, the retail traders are all putting risk on, we're in a pretty good market environment. We're setting ourselves up for a pretty big December rate cut here, or a possible rate cut.
Tell me about the Bitcoin chart, because I was arguing that it does kind of look like maybe, it needs a test at 100K.
Yeah, 100%.
That to me kind of looks like where there's, potential battle to be had. 1, 2, 3, 4, 5, 6, 7 days it was around there before it broke down. So obviously there was some meaningful consolidation, but when there's a battle like that, it's such a key level. I gotta think crypto bulls are going to try and push it back through there again.
Oh yeah, and right now it seems like the line is drawn in the sand by the bulls at right around 80,000. There's pretty much an accumulation price range around 74,000, but the buyer stepped in at 80,000. We ran it back above 90. We crashed through 90 back down, and the buyers came back in again. So now we're actually putting in a bit of a higher low reversal, a W formation, which is usually a sign at the bottom that's a reversal of a longer sustained trend. So we've been trending down. This would be more of a reversal to the upside. And again, it's that key psychological level of 100,000. Getting back above 100,000, maybe we could make Tom Lee look smart, get back to the all-time highs, and perhaps push the all-time highs at the end of the year. But that's a lot to ask for in the near term.
Well, the flows into the granny shots definitely suggests that he's looking like a genius already.
Yeah.
But I mean, he's looking for like 200 plus, right?
Him, Kathy Woods, everybody else. Yeah,
looking for 200 plus.
Sure, a limitation of supply, big enough demand, anything is possible. We're just going to have to see how the institutions play out. There's a lot of inflow, outflow over the last few weeks. But what I have noticed is that there's been some pretty big volume spikes in IBIT. which is the BlackRock owned ETF. And usually that's a signal that not just retail is piling in, but there's other components of Wall Street looking to buy in and getting some of that exposure. And anytime that Wall Street starts feeling comfortable about Bitcoin exposure, that tends to be pretty bullish for Bitcoin here.
Looking at the Kalshi odds for some of these, which we're talking about right now. Well, Bitcoin crossed 100K again this year. That's basically a coin flip, but today it moved up to 55%.
Yeah, not
so
surprising.
I think that at least a coin flip, and that's will it cross? Okay, so their definition is that it just needs to get across.
Right.
I'm happy to take that, 55 right now. I think that probably, I don't know if it's going to extend, break out. But I think it's got to test. I think if Bitcoin can't test 100, then you might have a monster big downswing in crypto from here.
Yeah, and quite honestly, that actually wouldn't be good for the markets. We know we're in a pretty bullish state when there's a lot of symmetry between the NASDAQ and Bitcoin, right?
Right.
And so when we're moving up sympathetically, and again, everything's leading to this, crescendo that's going to be next week. Is the Fed actually going to cut rates? We're projected at 88, 89%. We are down below 40% just a week and a half ago. It just seems like, right before the Fed blackout or the Fed member blackout where they couldn't speak to the market, we had a lot of hawkish tones, and then Fed Williams, Fed Waller, and then Fed Daily basically came out as very dovish, talked about the possibility. And, the market does operate on, the idea of, is there a chance? Is there a chance was enough for us to come back after that pretty big pullback in the NASDAQ, and we've been roaring off of those lows since. So, it all leads up to next week. Whatever happens next week is going to be a strong determining factor of not only going into the end of the year, but how we start off in January. And again, if that symmetry is still tied to NASDAQ, well, we talk about the Santa Claus rally. That really brings into the tune the 100,000.
Sure. Yep.
And, if we blow past that level, then, we're riding out on the highs to the end of the year.
Yeah, it seems like if you can get Master in particular to firm and to find, a little bit of momentum, that to me is still where a lot of this, it's kind of the epicenter, it's the nucleus, arguably, and I don't know, I think kind of a time bomb, but that's, it does, my point earlier about the technicals is that forget what you think about coins or Michael Saylor or whatever, just the technical suggests BTC probably wants to test 100, but whether or not it gets through, I think you got to see sentiment improve in strategy, because so much of it is wound up in there. And as long as Bitcoin is threatening, they're like, what is it, 70,000 roughly, kind of break even somewhere. It kind of goes between 65 and 75. But closer you get to that in Bitcoin, when we were down at like 80-ish or so, I think that was starting to make people really nervous about strategy.
Oh, yeah. And, obviously he had to raise some capital here just to kind of, give a little bit of positivity towards those investors. So we've seen the stock rebounding since. For me, it's a good sign of health in terms of the sector is seeing names like Circle, CRCL start coming back, the Peter Thiel backed bullish, BLSH, starting to come back, and we're now starting to see these stocks reversing after a really almost straight line downtrend. This doesn't mean that they're in a true road to recovery. I'm 100% with you. I think that there's been a lot more exposure about, Michael Saylor and MSTR. We still have the MSCI decision here as well, so if they get delisted, that's going to cause a major, major issue for that stock and their shareholders. So there's still a lot of headwinds, for a lot of these stocks. But, it's going to be undeniable if Bitcoin really does start taking off in relation with the markets. It's just naturally just going to be some gravitation towards these names on the buy side.
Like some of those names you mentioned there, they're a little bit more kind of overlooked. For reference to on what happens after we get through 150K, again, going back to Kalshi for some insight here, the above 150K bets before April, 18%. Before June 2026, 25%. What I think is kind of interesting is that when you stretch it out as long as it goes to June 2026, it only says 0.25% chance. So the Tom Lee and the Kathy Woods, according to Kalshi, have a lot of work to do on
100%.
that. But this is a different conversation than 100K. I think it's a very different conversation.
You are 100% correct. It just seems to be that kind of threshold. We actually saw Bitcoin, as you pointed out on the chart, just really when they got underneath 100,000 for the second time, just utterly break down. You know, we had really, really heavy duty selling, and it was almost as if it was like sharp bomb outs. And I don't know, you know, I've asked, you know, a lot of my friends who are really, you know, heavy into the industry, were these like whales getting liquidated? And he's like, actually, no, there's just not many bids there to slow it down. And so, you know, you could kind of see whether it was, you know, a bit of capitulation or just fear that, you know, this thing was going to really race down. So they were just being patient to buy in a little bit lower. Regardless, there just wasn't enough liquidity to hold things up. That firmed up really quickly at 80,000, and it's been holding since, which is giving a lot of optimism for that comeback. And again, you are correct. I feel that above that 100,000 and sustainability of that 100,000, that may change these odds on the prediction markets very, very quickly. So we'll have to wait and see once we get to that moment here.
I want to bring up one other name that you put on my radar that I missed today, which I do think is worth talking about, which is Texas Instruments. Kind of on the opposite end thematically of strategy and Bitcoin levering and totally new age contemporary investment is kind of the analog classic chip maker of Texas that sometimes does get left out of the overall AI discussion. I don't know, maybe that is an outdated view at this point because the chart's looking pretty solid. I mean, TXN just in the last couple days here is making a substantial move to the upside. What's going on with this? What did I miss here, Charlie?
You know, it's kind of in that same basket where you're talking about ON Semiconductor and MCHP. You know, these stocks have kind of been left in the dust because everybody's turning their attention to other component makers
in
like
July,
Micron.
it got annihilated on that earnings.
Right. And you know, actually, the last earnings report wasn't bullish for them either. They ended up gapping down, trying to rally, and then sold off since. And it's as if everybody forgot about them. But today they've crossed back above their 200-day moving average. They're starting to show a lot of strength. And there's these segments of the semiconductor sector that have, you know, deviated from the normal broad, strong rally that's been performed by, you know, the likes of Micron and AMD, you know, TSM and NVIDIA, of course. And, you know, Broadcom is one of the most underrated names in my opinion.
Think so?
Yeah, but, you know, I love the value that Texas Instruments
Already
offers.
put in a high, so that's nice.
Yeah.
You got the momentum behind Broadcom.
Oh, yeah, and
sure.
I don't feel like it's going to slow down at any point in time. We actually saw where they used to be kind of step for step, lockstep with NVIDIA. We actually saw NVIDIA showing a lot of weakness and Broadcom screaming up, and it's because it was the Google deal. They're a component maker for the new AI chips that Google's making, and that's kind of giving a little bit more depth and you know, kind of demand into that stock. And again, here we are with Broadcom pushing on the all-time highs and just starting to retrace back, where NVIDIA is, you know, well off their all-time highs and trying to get into a point of recovery.
130% for Broadcom up in the past year. Really extraordinary stuff. I got to say that if you have doubts about the AI sustainability and whether or not it's a bubble and all that talk, is just these. You know, it's not like this is a hot new company. Okay, the fact that you're able to take one of the oldest legacy tech players from the .com era, and now accelerate it, you know, to this point, I think tells you the scope and the size of what's going on right now.
100%.
And, you know, I constantly tell people that, you know, I couldn't do this. I couldn't do a lot of things. If it weren't for AI. It's just.
Oh, yeah. And, you know, if you look at different segments, I mean, when's the last time you heard about SanDisk being a face ripper to the upside, right? So we've seen the outliers in names like SanDisk and Seagate and Western Digital and now Micron being incredible performers. You know, the depth of gains that they've had just in this last 6 months, not this year, but just the last 6 months has been outrageous. And this is a segment that's just only starting to get some attention because they're starting to get a little frothy at the highs. But these stocks were making moves, you know, 2 to 3, 4% on a daily basis in terms of gains, it seemed like. And even when the markets were going down, it was almost as if people were funneling money into these stocks because they were really holding up relatively well. So, you know, you talk about these legacy names, these are some of the legacy names. And with Broadcom, you know, what's been outstanding is that I think their market cap now is greater than some of the other Mag 7 names. For sure more than Netflix, and I think at one point was more than Meta, which was really surprising to me.
Yeah.
And so you could see people are talking about AI being frothy, but I don't think people realize that we're only in the infancy stage. This is just the beginning, in my opinion.
It's really impressive. The other one, we got 2 minutes. One name we haven't hit that I knew you were looking at, UNH. Today's got an interesting leadership because we've got banks, we've got energy, we've got some other names. UNH firming up 4.9%, almost 5%.
Yeah.
What do you make of that? Because it's been kind of dead money for a little bit.
And
for a lot of it.
That's a kind of key thing. They're the major driving force in the Dow right now. And if you actually scale it down to a really intraday time frame, like a 3-minute, 5-minute, it's almost as if there's only buyers and no one was selling. So it was pretty surprising. But people are also not realizing how much interest that this stock has garnered from the retail side. It was almost as if like half of Reddit was rejoicing when they found out that this was the secret stock that Warren Buffett was slowly accumulating.
Oh, okay.
And then I've seen the memes like, we just found a whole new basket of bag holders. I don't know. This is a stock that has great upside. Obviously a lot of this is going to be attributed to, the Department of Justice investigation into possible Medicare fraud. But if that offers up clarity, this is one of those names that you actually want to look at from both a short-term and long-term standpoint because it offers up great value in return.
Okay.
And
Will
again,
value play in there?
Yeah,
Some outside the high-tech growth basket
Yeah,
if you're
of course.
interested, if you're in the market for that. VIX 16, as we go into the final tick here. Market's finishing up. I got to say, I think that does speak volumes, the fact that VIX is back below 16 and we're just
100%.
kind of chilling. Not a big gain, but a gain nonetheless.
Yeah, I mean, they're reverting back to that 14, 15 floor. I'm actually curious to see if they're going to stop there or if they're going to keep going lower. This is, history says that's where they're going to slow down. The markets are going to start getting choppy, but when we start 2026 and
7,000, baby, let's get there.
Listen, if they even inch at the idea that there's going to be more than 2 rate cuts for 2026, we're going to explode.
Yeah. All right. Fair enough. Great stuff. Charles Move. Fun. Nice. Good run through a bunch of different stocks there. Great stuff as always from Prosper Trading Academy and the team. That's it. That's the bell. You heard it. It's time to go. I will see you tomorrow, 2 to 3 p.m. Central Time for Chicago Future of Finance.